Okay, so let's start with IFRS 8 operating segments. Let's start discussing what is the background to IFRS 8 operating segments. Um, in order to understand IFRS 8, there is something that you need to know, that there are a lot of entities. I repeat, there are a lot of entities uh, which operate in multiple sectors. Like there may be a group of companies which is having an investment in the textile sector, which is having an investment on the automobile sector, having investment in the power sector, having investment in the transport sector, etc., etc., etc. So let me tell you that at times what happens is there are a lot of entities. What they do is that they invest in multiple sectors. Like for example, there could be a company which is having an investment in the textile sector, automobile sector, power sector, transport sector. So that means if an entity has invested in these multiple sectors, so ultimately the performance of these sectors will have an impact on the entity's performance. The entity's performance, the entity's financial statements, entity's profit and loss account, etc., 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 would be impacted by the performance of this textile, automobile, power, transport, every single sector. Now, assume that you have invested. Yes, Salman Khwaja, that's true. It's more of a theory that is examinable. Now, for example, you have invested in this specific parent company, or in this specific company which has invested into multiple sectors. And now you do have an idea that the automobile sector, and you do have an idea that the transport sector, they are going to be performing very badly in the upcoming months. If this automobile and the transport sector is expected to be performing very badly in the upcoming months, that means their sales are going to go down, and ultimately their profitabilities are also going to go down. And hence, if this entity has invested in automobile, if this entity has invested in transport, so ultimately it would have an impact upon this entity's financials also. So resultingly, what I could expect is that this company's profit to go down, and hence this company's share price to go down. So I, as an investor, I repeat, I as an investor would like to take an exit from this company's investment in case if I think that the future is going to be a downfall in share price. Now, the problem that arises is if this specific parent company is not disclosing in its financial statements that how much proportion of its revenue are from the textile sector, how much proportion of its revenue are from the auto sector, how much proportion of its revenues are from the power sector, how much proportion of its revenues are from the transport sector, if this specific entity is not disclosing this in its financial statement, how as I user of the financial statement know that what is my exposure with respect to investment in this company? I would never know about it. So in order to overcome this specific issue, in order to overcome this specific problem, the accounting standard named as IAS 14 segment reporting was introduced, which was later on replaced with IFRS 8, and the name of this IFRS 8 was operating segment. And what exactly is the objective of this operating segment accounting standard is that in case if you are a company which is operating in multiple industries, if you are a company which is operating in multiple industries, if you are a company which is operating in multiple geographical locations, if you are an entity which has got the multiple types of products, if you've got multiple divisions, then you as an entity have to make sure that you provide your user of the financial statement detailed disclosures about the various sectors, various geographical locations, various industries, various products where you have invested the money in. So basically IFRS 8 operating segment is with the major objective is to make sure that the user of the financial statement gets to know the maximum about how the entity earns, from where the entity earns. That is what the objective of IFRS 8 operating segment is. Now, let's move a bit forward and let's try to discuss further. The next thing with respect to IFRS 8 that you need to know is that, I repeat, the next thing with respect to IFRS 8 is you need to know that IFRS 8 is only a disclosure based accounting standard. Now, what exactly do you mean by only a disclosure based accounting standard? That is, whatever IFRS 8 is, it's only applicable to the notes to the financial statements of the entity. Last segment, okay, I said that it's divisions, multiple divisions. That is what I said. Multiple divisions. Now, I repeat, what happens is when we talk about the IFRS 8, IFRS 8 is only a disclosure based accounting standard. And what exactly do you mean by the IFRS 8 to be disclosure based accounting standard? This actually means that IFRS 8 only applies to the notes to the financial statements of the entity. I repeat, this would mean that the IFRS 8 only applies to the notes to the financial statement of the entity. So you don't have to apply IFRS 8 to the profit and loss account. You don't have to apply IFRS 8 to the balance sheet. You don't have to apply IFRS 8 to the cash flow. It's just the notes to the financial statement that you apply IFRS 8 to. Okay, now let's move a bit forward and let's discuss further that what exactly do you mean by an operating segment in accordance with the definition laid down in IFRS 8 operating segments. So what does it say? It says operating segment. An operating segment is a component of an entity. Now, the first thing is, what is a component of an entity? So the component of an entity could be a part of an entity. The component of an entity could be the geographical area of operation. The component of an entity could be a line of business. So it says an operating segment is a component of an entity that meets all these three conditions. What are these three conditions? That is, it engages in business activities from which it may earn revenues and incur expenses, including revenues and expenses relating to transactions with other components of the same entity. So in short, what happens is that it is engaged in the business activities. And what exactly do you mean by engage in the business activities? That is, it generates the revenue, that is, it incurs the expenses. So this is something that this specific component, which could be a division, which could be geographical area of operation, which could be a line of business, which could be a branch office, etc., etc. That specific component has to do all this thing. Whose operating results? Operating results would actually mean what? The profit and loss account, the sales, the expenses, etc., etc. Whose operating results? No, Nigongo, you are not allowed to take accounting standard to the exam hall. So it says whose operating results are regularly reviewed by the entity's chief operating decision maker. We give this a short form of CODM. The chief operating decision maker is given the short form of CODM to make decisions about resources to be allocated to the segment and assess its performance, and for which discrete means separate. Discrete means separately identifiable financial information is available. Now let's try to have an understanding about this definition of operating segment in detail. For example, there is an entity, and what happens with respect to this entity is that it has got multiple branches, branch 1, branch 2, branch 3. What happens is all of these branches meet the definition of the component. Now the second thing is that do they engage in Now, the next thing is that, so I told you that number one, these branches are the components of the entity. Now, the question mark is, do they engage in the business activities? So, yes, all of them make sales, all of them incur expenses, all of them make sales, all of them incur expenses, all of them make sales, all of them incur expenses. Now, the third thing is, whose operating results are regularly reviewed by the chief operating decision maker. Now, let me guide you what exactly is a chief operating decision maker. You see, the chief operating decision maker is the name of a role. It's not a designation. It's not a designation. It's the name of a role. I repeat, it's not a designation. It's the name of a role. So, who is a chief operating decision maker? When we talk about this chief operating decision maker, it could be your chief executive officer, it could be your chief operating officer, it could be your chief financial officer, it could be your board of directors, it could be the, like it could be anything. So anyone who has got the responsibilities, who have got the power to decide the allocation of resources, decide allocation of resources, so that specific person is going to be considered as the chief operating decision maker of the entity. I repeat, anyone who has got the power to decide the allocation of resources. So allocation of resources. So anyone who could decide about allocation of resources, that person is going to be considered as what? That person is going to be considered as chief operating decision maker. Now, let me guide you something. For example, this segment makes a sale of 10 million a year. This segment makes a sale of 500 million in a year. This segment makes a sale of 800 million in a year. Now, I, being the chief operating decision maker of the entity, only review the result of these two branches every month. With respect to this branch, I only view the results once in a year. So now what happens is, just because of the fact that I don't review the result of this branch on a regular basis, this is not going to be an operating segment. Why? Because one of the conditions for a segment, for a component to be an operating segment, is that its results should be regularly reviewed by the chief operating decision maker. What do I mean by regularly review? So the frequency by which you review the results of your other segments, you review the result of this segment also. If you don't review, that means you don't consider it to be an important segment. And if you don't consider it to be an important segment, that means we don't consider it to be one of those areas for which the separate information is to be provided to the user. Because ultimately, remember, we are talking about the IFRS 8 to be a disclosure based accounting standard. I repeat, we are talking about IFRS 8 to be a disclosure based accounting standard. So if it's a disclosure based accounting standard, you need to give disclosure of the things which are important, not of the things which are useless. So the chief operating decision maker is only reviewing the results of these two segments regularly. That means this is not an important segment. If this is not an important segment, this is not an operating segment. Do you people get it? Yeah, do you people get it? Okay, good enough. Now let's move a bit forward. Yeah, section 1 is not going to be considered as an operating segment. How would we disclose it? I'm going to let you know, but we are going to disclose this section 2 and section 3 separately. Now try to understand more. So what happens is, for anything to be an operating segment, it has to engage in the business activities, number one, which includes the revenue generating activities, which is that you make a sale, you incur expenses. The second thing is, its results are regularly reviewed by chief operating decision maker. The third one of them is for which discrete financial information is available. That means for which separate financial information is available. That is all going to be something that is going to arise. Now, let's try to understand this. So do you people understand the concept of the operating segment? What is an operating segment? A component of an entity. The component could be a part, could be division, could be geographical area of operation, could be a line of business, could be branch, anything that engages in the business activities from which it may earn revenues and incur expenses, whose operating results are regularly reviewed by the chief operating decision maker. I told you who a chief operating decision maker is, and then for which discrete financial information is available. So all of these conditions are required to be met for an operating for a component to be considered as an operating segment. Now let's move a bit forward and let's discuss further. So one of the steps with respect to, I repeat, one of the aspects with respect to this IFRS 8 operating segment is that you need to identify operating segments. Now, so with respect to IFRS 8, the step number one is that you have to identify what operating segments are there. That's number one. The next thing that you need to do with respect to IFRS 8 is step number 2. And what is this step number 2? Step number 2 is you need to identify reportable segments. You need to identify reportable segments. So I repeat, the first step was that you had to identify the operating segments, and the second one of them is you have to identify reportable segment. Now, what exactly do you mean by reportable segments? So when we talk about the concept of this reportable segments, so as per the requirements of IFRS 8, IFRS 8 says that a reportable segment is an operating segment, whose results are separately recorded, whose results are separately presented in the financial statements. So your operating segments whose results are separately presented in the financial statements, that is going to be considered as your reportable segment. I repeat, what is the reportable segment? Reportable segment is your operating segment whose results are separately presented in the financial statement. So like for example, you may have got 1, 2, 3, 4, 5, 6, 7. Let's say you've got 7 operating segments. You've got separate operating segments. And when you've got 7 operating segments, there is specifically a criteria laid down which identifies that what is a reportable segment amongst these 7 operating segments. So maybe you've identified that this segment number 1 is not reportable, segment 2 is, segment 3 is, segment 4 is not, segment 5 is not, 6 is not, 7 is. So maybe what happens is there could be many operating segments, but it's not necessary that you're going to report separately the results of every operating segment. So maybe you report the results of these 3 segments separately. So they are going to be considered as what? they're going to be considered as your reportable segments. Now, a question mark that arises is, how exactly do we identify a reportable segment? So for that, I'm going to tell you people, just wait a bit. I'm going to explain to you. First, try to understand the concept of reportable segment. That a reportable segment is one of those operating segments whose results are separately presented in the financial statement. Yeah, so is everyone okay with this concept of reportable segment? That it's one of the operating segment, it's an operating segment. Now, first and the foremost important thing is, a reportable segment is an operating segment. That means it has to be an operating segment first. So it's an operating segment whose results are separately presented in the financial statement. That is going to be considered as reportable segment. Okay, now see. So, how do we actually identify an operating segment to be reportable segment? No, Denomi, the voice isn't going. I'm just waiting for you people to get back to me if you people are okay or not. The voice doesn't go. I just take a break to help you people absorb whatever that I'm saying. Okay, so see, now what makes an operating segment to be reportable? So there are various quantitative thresholds. There are various quantitative thresholds. What do you mean by these quantitative thresholds? It says an operating segment becomes reportable if any of the following conditions are met. So what does it say? It says an operating segment becomes a reportable segment if any of the following conditions are met. What are those conditions? The first one of them is its sales. Its sales are greater than or equal to 10% of the sales of all operating segments, internal and external. Number two is that its assets are greater than or equal to 10% of the total assets of all operating segments. And then the third requirement is that its profit or loss in absolute terms is greater than or equal to 10% of the higher in absolute terms profit of all operating segments having profit and loss of all operating segments having a loss. So I repeat, what happens is when we talk about the concept of these quantitative thresholds, what exactly are these quantitative thresholds? So the quantitative thresholds are the numbers that are being laid down in IFRS 8. And if an operating segment meets any of these following conditions, if an operating segment meets any of these following conditions, one of the conditions is about the sales, one of the condition is about the assets, and one of the condition is about its profit or loss. So if an operating segment meets any of these conditions, then that operating segment becomes a reportable um, it says if the sales or the assets or the profit or loss, all of these things. So what actually needs to be done is that if any of these criteria is met, then what happens is um, you need to make that operating segment a reportable segment. Now, how exactly do we do it? So for this, I'm just going to explain to you one by one. So in case if you wish to copy, just let me know once you are done, and then I'm going to move forward. So if any of these quantitative thresholds are met, then what happens is, I repeat, if any of these quantitative thresholds are met, then an operating segment becomes a reportable segment. How? Let's try to see this thing. So one of them is its sales are greater than or equal to 10% of the total sales of all operating segments. Now try to understand this. You've got operating segment A, B, C, D. You've got 1,000, you've got 100 million sale, 200 million sale. This segment has got 20 million sales. And then what happens is this segment has got 33 million sales. Now, what are these sales? Are these external sales or internal sales? So they include both of them. Now see, what happens is 100 million plus 200 million plus 20 plus 33 gives you 353 million. This is the total sales of all operating segments. Now, if I try to identify which of them meets the criteria for sales, what am I going to do? I'm going to say 100 divided by 353. I'm going to say 200 divided by 353. I'm going to say 20 divided by 353. 33 divided by 353. So if you look at this, so 100 divided by 353 is 28.3%. 200 divided by 353 gives you 56.7%. 20 divided by 353 gives you 5.67%. 33 divided by 353 gives you 9.3%. Now, if you look at all of this, you would identify that on the basis of sales, this operating segment is reportable. This is reportable, but this isn't, and this isn't reportable. So the first criteria was the sales criteria. So we have identified that it was the operating segment A and it was operating segment B that met the criteria. The operating segment C, operating segment D, they did not meet the criteria. So the operating segment C, operating segment D did not meet the criteria for the sales. Now what next is there? The next situation is let's move a bit forward and let's discuss further. The next situation is, it says its assets are greater than or equal to 10% of total assets of all operating segments. So the same thing that you have to do, you have to calculate total assets and you have to compare the assets of the operating segment with total assets, and you have to see if it increases, if it is greater than or equal to 10%, then it becomes it becomes a reportable segment. I repeat, then it becomes a reportable segment. Now what next is there? Let's move a bit forward. The next situation is, yeah, for each year you will have to do an assessment on each and every operating segment to see that if it meets the criteria for the reportable segment or not. So for each year you would have to do it this way. Now let's move a bit forward. The next situation that the examiner says is that it's profit or loss in absolute terms. Now a very important concept, which is the concept in absolute terms. What exactly do you mean by the absolute terms? Try to understand this. If I talk about the absolute terms that you have to ignore the sign. You have to ignore the sign positive or negative. You just have to ignore and you just have to talk about the number. So like for example, if I say the value of positive 100, if I say a value of negative 250, and if I ask you which one of them is a higher value, so obviously you would say that 100 is the higher value. But if I ask you people, what is the higher value in absolute terms? So in absolute terms, 250 is a higher value. So let's try to understand what the accounting standard means when it says absolute terms. The absolute terms means the accounting standard is telling you, look, ignore the signs. What is the accounting standard telling you? It's saying, look, ignore the signs. So it says its profit or loss in absolute terms is greater than or equal to 10% of the higher, 10% of the higher in absolute terms of the profit of all operating segments having profit, and the loss of all uh, operating segments having a loss. Now see, what happens is, assume that you've got A, B, C, D, E, F. You have got these 6 segments. One of them has got 200 million profit. This has got 80 million profit. This has got 30 million profit. This has got a loss of 100 million. This has a loss of 300 million. And this has a loss of 40 million. So what happens is, the accounting standard says you have to add up profit of all profit making segments. You have to add up the loss of all loss making segments. So if I say it's 200 plus 80 plus 30 gives you 310 as the profit. If I talk about the loss, it's 100 plus 300 plus 40 gives you 440 as a loss of all operating segments that had a loss in the current year. Now what you need to do is that you need to say that if I talk about in absolute terms, the higher value in absolute terms is going to be 440. I repeat, the higher value and absolute terms is going to be 440. Now, if the higher value in absolute terms is going to be 440, so that means what we need to do is that we need to see if any operating segment that has a profit or loss of 44, if any operating segments has a profit or loss of 44, that is going to be considered as what? That is going to be considered as an operating segment that would become reportable. So now see, let's try to understand this. What is going to happen now is that we would say that 44 is the threshold, 44 is the benchmark. So if 44 is the benchmark, A becomes reportable, B becomes reportable, C is not reportable on this criteria. D becomes reportable, E becomes reportable, F is not reportable. Do you get it? So whatever the operating segments you have got, the multiple operating segments, what you have to do is that you have to check them against each of these criteria. If any of the criteria is met, you would make that operating segment reportable. If none of the criteria is met, then that operating segment would not become reportable. So do you get this profit and loss condition also? Yeah, do you people get it? Okay, so okay, clear. Repeat it again. Okay, I'm just gonna do it. Is it because 30 upon 310? No. It's not about 30 upon 310. Now see, you need to try and understand this thing. See, what happens is the rule was that you have to identify the profit of all profit making segment. You have to calculate the loss of all loss making segment. So we summed up the profit of all profit making segment. We summed up the loss of all loss making segments. Once we summed them up, it says in absolute terms. In absolute terms means you have to ignore the sign. You have to ignore the sign. So when you have to ignore the sign, so that means 440 becomes the higher amount. So the 10% of 440 is 44. So if any segment has got a profit or if any segment has got a loss, which is equals to or which is greater than 44, it's going to become a reportable segment. Thank you for your input, Ms. Keen. Thank you for this. Okay, so if any of the operating segments, if any of the operating segment meets any of these criteria, it becomes a reportable segment. Let's move a bit forward. Now, with respect to IFRS 8, there is a 75% rule that you people have to keep in mind. I repeat, with respect to IFRS 8, there is a 75% rule that you people have to keep in mind. What is that 75% rule? Yes, Nigongo, it's going to be recorded. Don't worry. Now, what is this 75% rule? Let's try to have a discussion of this. The 75% rule says that if the external sales of all reportable segments is So it says the external sales of all reportable segments should be greater than or equal to 75% of entities' external sales. I repeat, what does it say? Okay, Bola Edov. Thank you for your question. Just go through what I've mentioned here. If any of the following conditions, if there is any of these conditions that is met, it is going to become a reportable segment. I repeat, if any of the condition is met, it is going to become a reportable segment. So it doesn't need to be all three. It has to be either of them. Okay, now let's move a bit forward. So now what is this 75% rule? When we talk about the 75% rule, it says the external sales of all reportable segments should be greater than or equal to 75% of entities' external sale. What do you mean by this? For example, you've identified, yes, they can give different reportable segments, Jihane. Assume that you've got segment A, you've got segment B, you've got segment C. They've got internal sales, they've got external sales. You have made them reportable. Assume that you have to ignore their internal sales right now and you have to identify what is their external sale. Let's say their external sale is 570 million. And what is the entity's total external sale? So you identify that the entity's total external sale is 1000 million. You identify that the entity's total external sale is 1000 million. So now see, if the external sale of the entity is 570 million and if the external sale of all reportable segments is 570 million and that of the entity is 1000 million, so what is going to happen? 570 divided by 1000 gives you 57%. I repeat, 570 divided by 1000 gives you 57%. So now, if 570 divided by 1000 gives you 57%, what exactly do you mean by this? This would actually mean that this 75% rule is not met. So if the 75% rule is not met, what are you going to do as an entity? You will identify more operating segments and you will make them reportable. You will identify more operating segments and you will make them reportable even if they don't meet any of the thresholds. Even if they don't meet any of the criteria, you will still identify more operating segments and you will make them reportable. Even if they don't meet any of the criteria. So now, there is a question that is being asked. So how would we decide which operating segment? How would we decide which operating segment is going to be made reportable? So obviously, what are we trying to establish? We are trying to make sure that this 75% criteria is met. So whichever operating segment has highest external sales, whichever operating segment has got highest external sale, you are going to make them reportable. You're going to make them reportable. Even if they don't meet any of the 10% criteria of sales, of assets, or of profit, You just have to make sure that you end up getting the total external sales of all reportable segments to be 75% of the entity's external sales. Okay, now what next is there? The next situation is that this is the 75% rule. So what I could do is that I could just recall whatever I've taught you up till now. What happened is we started off discussing about this IFRS 8 operating segment. And when we talked about IFRS 8, we discussed that the objective of IFRS 8 is to make sure that you disclose whatever possible information with respect to the operating segment. uh, you disclose that. So we discussed about the definition of operating segment, that what is an operating segment. And then the next thing that we did was we discussed about the concept of reportable segment. And I told you people that reportable segment is an operating segment whose results are separately presented in the financial statement. And how do we identify a reportable segment? So we identify a reportable segment using either the quantitative thresholds. What exactly do you mean by quantitative threshold? So if any of these conditions are met, an operating segment becomes a reportable segment. What are these conditions? The condition could be with respect to sales. The condition could be with respect to assets. The condition could be with respect to profit or loss. So if any of these conditions is met, then an operating segment becomes a reportable segment. The next thing that we talked about is that we talked about the 75% rule, and I told you people that um, although you have to make sure that the 10% rule, the 10% criteria is met, but in case at times what happens is that this 75% rule is also required to be met. That is, the external sales of all reportable segments. I repeat, the external sales of all reportable segments should be greater than or equal to 75% of entities' external sales. Should be equal to or greater than 75% of the entity's external sale. So in case if it is not there, then you have to identify more operating segments. In case if that is not there, then what actually happens is that you have to identify more operating segment and you have to make them reportable. 75% rule is applied after 10% rule. Once you have applied 10% rule, then you apply 75% rule. Okay, now let's move a bit forward. So now once you've identified this operating segment and you've identified the reportable segment, so the next thing that actually goes about is the concept of disclosure. Now what exactly do we need to disclose? So we need to be able to understand that what is it that we need to disclose. So there are multiple disclosures. There is a list of disclosure that you have to ensure that you follow. So what I'll do is that I'll not be talking about the disclosures right now, but I'll do one thing, which is There is one more criteria which needs to be discussed with respect to IFRS 8, and that is called the criteria of aggregation. I repeat, there is a criteria which is called the aggregation criteria. Now let me tell you that what exactly do you mean by this aggregation criteria. Let's discuss about it. Basically what happens is, a lot of companies, what they try to do is that they try to add up the results of multiple operating segments and consider them to be one single operating segment. So the point is, can I add up multiple operating segments and make them one? Like, can I add up operating segment A with operating segment B, operating segment C with operating segment D, operating segment E with operating segment F? Can I do this? So the answer to this is that yes, you can do if these operating segments have got similar, if these operating segment have got similar characteristics. So if the operating segments have got similar characteristics, you can always aggregate them. You can always add them up. Now, what are these similar characteristics? That is something that we need to understand. Now, what are those similar characteristics? It says that they need to have similar economic characteristics and the segment should be similar in each of the following respects: the nature of the products and the services. The nature of the products and the services. Now, let me give you an example of Unilever. Unilever has got multiple brands. It offers Pond's cream, it offers Sunsilk shampoo, it offers the Lux soap, it offers the Fair and Lovely, which is now being renamed as Glow and Lovely. It offers the Walls as a frozen dessert. It offers Lipton. There are multiple types of things that the Unilever offers. So what Unilever has done is that Unilever has actually combined all of these products under one single segment, and that is called beauty segment. Why? Because it says the nature of these products and services is the same. The nature of the production process, so more or less the production process is same. The type or class of customer, so usually Unilever sells to distributor. Unilever sells to distributor. It does not go for the wholesale sale on its own. It does not go for the retail sale. It goes for the distributors. The methods to distribute their products, so it's a third party distributors usually. And if applicable, the nature of regulatory environment, for example, banking, insurance, etc., etc. So what Unilever does is that in its financial statement, it presents three operating segments, three reportable segments. One of them is the beauty section. The other one of them is called the ice cream section. And the third one of them is a beverages section, under which it shows all of its Lipton tea and the other tea brands that it operates. So what happens is, this is something which is termed as an aggregation. Otherwise, Pond itself would be considered as a separate operating segment. Sunsilk would be a separate operating segment. Lux would be a separate operating segment because they are such large businesses. So although they might be such large businesses, but to make things easy for themselves and for the user of financial statement, they've aggregated these operating segments. So what could happen is, in case if your operating segments have got similar economic characteristics, then what you as an entity could do is that you could aggregate these operating segments and make them considered to be one single operating segments for the purposes of the checking against the 10% rule, or for the purposes of checking against the 75% rule. That is something that you could do as an entity. Is that okay now? Okay now. So one of the important areas with respect to the accounting under the IFRS 8 is to be able to identify the reportable segment, that what exactly are the segments that are going to become reportable. So for you to be able to identify the reportable segment, the first and the foremost thing that you have to do as an entity is that you have to identify the operating segments first, and then you have to identify the what then you have to establish, then you have to detect which of these operating segment becomes a reportable segment. That is something that you would have to do as an entity. Okay, Jihani, how it will look like, don't worry about it. It will test you against the criteria. It will test you against the criteria of the segments meeting the operating segment or not. So that is what it is going to do. It is going to test you against the criteria. Okay, so we are done with this specific part of the IFRS 8. So I'm going to end my class till here. In our next class, we will be talking about the disclosure requirements of IFRS 8 and how an exam question on IFRS 8 is going to be tested, and how do we need to answer that question. So we are going to discuss that in our next class. The question on Delta Industries actually tests your concept of being able to identify that whether an operating segment is a reportable operating segment or not. So what I would want you people to do is that to try and attempt this question and identify which of the operating segment becomes reportable and which of them are not reportable, and whatever the relevant requirements of IFRS 8 are, just try to apply them to this specific question, and then we are going to discuss in 5-10 minutes. So let's just start discussing about this question, that how exactly is this question going to be solved. So now you see what happens is it says Delta Industries is a listed company reporting under IFRS in the clothes and accessories manufacturing and retail industry through chains of shops. So what is it? It operates under the IFRS and accessories manufacturing and retail industry through chains of shops, wholesale and online sales platforms. Delta Industries has obtained a stock market listing during the current financial year and will be reporting operating segment information under IFRS 8 for the first time. So one thing that is important to understand is that IFRS 8 is only applicable on the listed companies. We are going to discuss that a bit later, but right now it's in the process. I mean, this company has obtained the listing, so that's why it's applying IFRS 8. And since this is the first year in which they are applying IFRS 8, therefore they are a bit concerned. It says Delta Industries. What does it say? It says Delta Industries divisional data for the year ended. This is as follows. So you are being provided the external revenue, you're being provided the internal revenue, the profit or loss, the total assets, the total liabilities. So menswear, women's wear, children clothes, sportswear wholesale, sportswear online, formal wear, bridal wear, eyewear, fragrances. This is what it is. It says the above figures and further detailed breakdowns are reported on a monthly basis to Delta's Industries chief executive for decision making purposes. So this chief executive is going to be considered as a chief operating decision maker. There are substantial sales between divisions where shops stock small range from other division products. Okay, that's okay. Now, Delta Industries would also like to combine the figures for the two sportswear divisions as they are in a similar line of business. The main difference being that the wholesale division sells wholesale in public retail shops, whereas the online division sells retail to general public. Okay, that we are going to talk about it a bit later. But for the time being, let's try to understand that whether they meet the 10% rule or not. Let's try to see if they meet the 10% threshold or not. So if we talk about it, what is actually going to happen is try to understand this. So if I talk about this question, the Delta Industries. The first thing is it says the external revenue is given, the internal revenue is given. So what happens is, what is the total sales? The total sales are going to be 85,100 plus 5,966. So if it is how the sales are going to be, which is 85,100 plus 5,966. So this is actually going to be 91,066. If we apply 10% of it, so 10% of it is going to be 9106.6, or we could just say 9107. This is what is going to be the threshold for sales. If I talk about the total assets, the thresholds are going to be what? You've got 43,587 into 10%. So this actually gives you 4359. What does it give you? 4359. Then you've got the profits and the losses. Now, if I talk about the profits and the losses, so what are we going to do? We're going to talk about the profit of all operating profits having a profit and the loss of all operating segments having a loss. So if I could just see that the total net profit or loss is 8160. So if I try to just establish the profit, it's going to be 8160 plus 812, which is the loss that's being incorporated, plus 1006, which is another loss that's incorporated. So resultingly 9978 is what it is going to be, and the loss is 812 plus 1006. So you have got 1818. So basically the profit is the higher amount, and if you say the profit multiplied by 10%, so it gives you 998. So we have got the three thresholds, which is going to be the sales and then the assets and then the profit. So we have got the three thresholds available to us. Well, what happens is this 8160 was the sum of all profits and losses. This was not the total profits, because you have to segregate the operating segments which are having a profit, and you have to segregate the operating segments which are having a loss. So the operating segments which are having a profit is this. The operating segments which were having a loss is this. So the higher of these two is the profit amount. So profit into 10% is this. Yes, if the loss is higher, we should take 10% of the loss, Fatma. Now, let's try to understand this thing. So now what is actually going to happen is, you're going to say that we have got these multiple operating segments. What are these multiple operating segments? Um, okay, now, so what happens is we have got the threshold for the total sales to be what? To be 9107. I repeat, it has to be 9107. For the profit and loss, it has to be 998. And for the total assets, the threshold is what? 4359. So what is it? It's 4359. Now, we need to see that does it meet the criteria for sales and then the profit or loss and then the assets or not. So for each one of these segments, we have to see if they do meet the criteria or not. Now, do they meet the criteria for the sales? The sale was 9107. So this one is no. For the profit or loss, no. For the assets, again, no. Is that okay? The menswear does not meet the criteria. Is that okay? The menswear, yes, Donami, you did understand correctly. You see, what happens is I have used the shortcut. Just try to understand. If you want profit of all profit making segment, it's 878 plus 3242 plus 2931 plus 1262 plus 425 plus 768 plus 472. If you wish to add up the profit, this is how you do it. I mean, and what I have done is I've simply taken the sum of profit and loss and I've added back the losses, so I end up at the profit. So what you understood in the last session was correct. It wasn't wrong that you have understood. Okay, so do you people get it? That the sales, P&L and the assets, this menswear does not meet any of the criteria. Yeah, what you need to do is that you need to add up both of them. I have not added up both of them, but even if you add up, it's going to be less than 9107. Okay, now let's just see. So with respect to women's wear, it's already exceeding 9107, so it becomes reportable here. Is it reportable from the perspective of profit or loss? Yes. From the perspective of the assets? No. But even if one criteria is met, it becomes reportable. So this segment is going to be reportable segment. Now, children growth, from the perspective of the sales, it's not. From the perspective of profit or loss, again it's not. From the perspective of the assets, again it's not. Now let's move a bit forward. Sportswear, yes, yes, and yes. Sportswear online, yes, yes, and yes. Formal wear, no, no, and no. Bridal wear, no, no, and no. Eyewear, no, no, and no. Fragrances, no, yes, 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 and no. So resultingly what happens is, given the criteria, we have got we have been able to identify these four operating segments to be reportable. I repeat, we have been able to identify these four operating segments to be reportable. I repeat, what we have been able to do is that we have been able to identify these four operating segments to be reportable. Okay, now let's move a bit forward and let's discuss further. So what next is there? The next situation that you need to understand is that how exactly are we going to account for the whole of it? So there was something pertaining to how you identify. So you would say that based on the quantitative thresholds, women's wear, sportswear, wholesale, and sportswear online, and fragrances are reportable segments. So one of the things that you need to do is that you need to see if your operating segments are reportable or not. I repeat, what do you need to do? You need to see if the operating segments are reportable or not. Now, what next is there? The next situation is you have to apply the 75% rule. So what is it that you have to apply? You have to now apply the 75% rule. So what happens is you have to identify the external sale of the entity. I repeat, you have to identify the external sale of the entity. So the external sales is 85,100, of which if we apply 75% rule, so 85,100 into 75% gives you 63,825. I repeat, gives you 63,825. That is going to be the sales, 75% of the sales. I repeat, this is going to be 75% of the sales. Okay, now what happens is, what we are going to do is that we have got these four segments, and we are actually going to identify the external sales of these reportable segments. The external sales of reportable segments is what we are going to identify now. So it's 13,282 plus 20,772 plus 15,354 plus 6,854. So if you sum up all of this sale, 13,282 plus 20,772 plus 15,354 plus 6,854, so resultingly this turns out to be 56,262. I repeat, resultingly it turns out to be what? 56,262. Now, so what is actually happening is the external sales of all reportable segments is less than 75% of entities' external sales. So more operating segments shall be identified and made reportable. More operating segments shall be identified and made reportable. So what you will have to do over here is that you will have to identify more operating segments and you will have to make them reportable. Now, so amongst these, the operating segment which has got the highest external sale, you have got bridal wear, then you have got this menswear. So if I, let's say, if I say bridal wear, if I say menswear, the external sale of bridal wear is 7680. The external sales of menswear is 5905. If you sum up both of them, it's gonna be 13,585. So how much was the difference over here? If we could see that what was the target for the 75% and how much was it, 863,825 minus 56,262. So resultingly 7563 was the differential. If 7563 was the differential and 13,585 is being achieved, in fact we don't even need the menswear. Even if we just go for the bridal wear, our target is going to be achieved. So it's just the bridal wear that needs to be made reportable segment. I repeat, it's just the bridal wear that needs to be made the reportable segment. Okay, now there's this last one area from this specific part of the question, and that is that it says the Delta Industries would also like to well, Bola, your question, which is that is there a criteria? The criteria is that the one with the highest external sale, the segment with highest external sale should be considered. So now what happens is there is this last one portion about this specific question, and that was that they wish to combine the figures of the two sportswear divisions as they are in a similar line of business. The main difference between them is that the wholesale division sells wholesale in bulk to retail shops, whereas the online division sells directly to the general public. Now let's try to have an understanding of this. Basically what happens is that um, in order to aggregate two or more operating segments, it is essential that those operating segments have the similar economic characteristics, and that includes the type of customers that each of the segments sells to. One of the division makes wholesale to stores, whereas the other division or the other segment does retail sales to general public. Therefore, therefore, they cannot be aggregated. So you get it now. They cannot be aggregated. Why they cannot be aggregated? The reason being that they don't have the similar economic characteristics. So when they don't have the similar economic characteristics, you cannot aggregate them. I repeat, when they don't have the similar economic characteristics, you cannot aggregate them. Okay, now, so we are done with this specific question. Now, this was one of the past exam. I mean, this is basically an examination question from another examining body, which I came across. So I tried to use this specific question. Anyways, let's move a bit forward and let's talk further. So, what next is there? We have got one more question here. Okay, the name of this question is velocity. So what I would want you people to do is that to attempt this question, the name of which is velocity. What exactly is specifically covered in this scenario? It says that velocity for the year ended 31st March 2003, the directors of Velocity, a public limited company operating in the transport sector, identified the following operating segments. Segment 1, which is the local train operations. Segment 2, which is intercity train operations. Segment 3, which is railway construction. So they've identified three different segments. Finance director has determined that segments 1 and 2 should be aggregated into a single or reportable operating segment on the basis of their similar business characteristics and the nature of the product and services. So what have they identified? They've identified that the segments 1 and the segments 2 should be aggregated. So that's what they have identified. Now let's just try to understand this. Now, the next thing is, it says the finance director has determined, I repeat, it says the finance director has determined that the segments 1 and 2 should be aggregated into a single reportable agreements on the basis of their similar business characteristics. Okay, so now what happens is, it says the characteristics of each market are as follows. Now, what are the characteristics? The local train market, local transport authority awards the contract. So what is it? The local transport authority awards the contract and pays Velocity for its services. The contracts are awarded following a competitive tender process. The ticket prices paid by passengers are set by and paid to the transport authority. So it's actually the transport authority who's our customer. We sell to the transport authority and the transport authority sets the prices. The transport authority sets the prices and the transport authority actually sells those tickets to the customers. Whereas intercity train market, the ticket prices are set by Velocity and the passengers pay Velocity for the services provided. So what happens is, it says the intercity train market, ticket prices are set by Velocity and the passengers pay Velocity for the services provided. Managing director is pleased about this as segment 1 has seen a sharp decline in profits during the year, whereas segment 2 has shown improved margins. Managing director does not believe that segment information is relevant to investors. He believes that investors simply provide funds and are not interested in how management generates returns from them. Anyways, I mean, we're not going to be talking about this stupid comment from the managing director, but we are just going to be talking about that how this is actually dealt with. Now you see what happens is, what you are going to do with respect to it is, if I talk about the answer to this question, which is velocity, so you need to understand this thing, that in accordance with the requirements of IFRS 8, two or more operating segments can be aggregated. In accordance with the requirements of IFRS 8, two or more operating segments can be aggregated and presented as a single operating segment if they have similar economic characteristics. Amongst the economic characteristics include the type of customer, the method of distribution, the regulatory environment, etc., etc., etc. These are a few of the important things. Now see, in the present circumstances, the local train segments sell to local train authority under a through a competitive tender process, and the ultimate price applicable for the passengers is not within the control of the ultimate price applicable for the passengers is not within the control of velocity. Whereas in the case of the intercity train, the tickets are sold directly to the customers, and velocity sets the selling prices on its own. So what happens is, therefore, the circumstances and the type of customers for both are different. Therefore, these two segments do not have economic similar economic characteristics, and hence cannot be aggregated. So this is something that you would have to talk about. I repeat, this is something that you would have to talk about. Do you people get it? Do you people get it? That how exactly are you going to answer the question? Yeah, is that okay to everyone? Anyone having any issues on this? Uh, okay, they can. You misunderstood. Okay, Jahan. I mean, it was the same. No, it wasn't. It's just not the same line of business. Yeah, you need to explain the relevant rule and then link it to the question, Hanan. That's how you have to do it. Okay, now let's go on to conclude IFRS 8. So, amongst the different things that we have studied with respect to IFRS 8, we now understand what is an operating segment. We now know what is a reportable segment. We now know the 10% rule. We know the 75% rule. We know the aggregation criteria. All this is something that is known to us. So now we do have an idea that how do you actually identify an operating segment? How do you identify a reportable segment? What's a 10% rule? What's a 75% rule? And what is an aggregation criteria? So all of this, we do have an idea. We do know this thing. Now, let's talk about the disclosure that are actually required to be made in accordance with IFRS 8. So there are multiple disclosures that are required to be made in accordance with IFRS 8. And what we'll do is that we'll talk about each one of them. I repeat, we'll talk about each one of them one by one. Now let's talk. So for the different reportable segment amongst the various disclosure, I'm just going to list down the different types of disclosure that are required to be made. So amongst the different type of disclosures that are required to be made, that is number one is the information about reportable segment. That is what is their business and how they generate sales. So the number one of them is the information about the reportable segment. That is what is their business and how do they generate the sales. So you could look at it from this specific disclosure, which is actually the description of the type of products and the services. So I would want you people to go through this disclosure so that we can move forward. Happens is you have seen this that they have actually provided the description of these reportable segments, that it says the diversified company has got 5 reportable segments: the car parts, motor vessels, software, electronics, and finance. What does car parts does? It produces replacement parts for sale to car part retailers. Anyways, so all of these operating segments, that what do they do and how do they generate the profit or loss, that is actually given. Now, the second thing is measurement of operating profits, operating segments, profit or loss, and the assets and the liabilities. So, the next thing is measurement of profit, loss, asset, liability. Let me explain to you what do you mean by this. For example, in our company, what we do is that we do a very different type of accounting for the internal purposes. Now, what is the accounting that we do for the internal purposes? We recognize the sale on a cash basis and we recognize the expenses on an accrual basis. Now you would say why? Because what happens is we don't want to actually complicate our accounting. I know that if I am going to ask my accountant to do the accrual basis of accounting, he's going to mess up things. because he is not qualified enough to actually handle those things in such a matter. So what I have actually instructed my accountant is that you book the sales on a cash basis and you book the expenses on an accrual basis. Now, how does this help me? This actually helps me that the inflows are considered to be my income, and the expenses that I've incurred, they're going to be considered as my expense, because I know this is what the capacity of my accountant is, and I know that this is how I want to look at the results. So you see, I am part of management. So if I'm part of management, I want to look at the things in a way, and I've instructed our accounting team to actually prepare it in that specific manner. Now, how do they account for the assets? They account for the assets at cost. Do they depreciate? No. Okay, why? Because they don't have the capacity to keep a record of the asset. Now, how do they incur a liability? So how do they book a liability? On an accrual basis on whatever amount that becomes due. So you see, every single company, every single management can have own policy of measurement of the profit or the loss of the assets or the liabilities. You are not required to actually show, I mean, like the disclosure as per IFRS 8 can be done in accordance with the management accounts. I mean, like whatever way you present to your management, you could do it from the management accounts disclosure. It's not necessary that it's as per IFRS 15 or as per the IAS 16 or IAS 36. You can disclose them the way you disclose to management. Kindly look at this. Let's discuss a bit further. So I hope you do understand. Well, Jihane, I mean, I think I'll explain to you later on, because right now I need to explain the disclosures. I'm sorry about it, but I cannot explain it right now. Just wait a bit. Now, the third one of them is the factors used to identify the entity's reportable segment. Now, what is it? The factors used to identify reportable segments. Is it on the basis of your branch? Is it on the basis of your division? Is it on the basis of your subsidiary? Is it on the basis of your product? On what basis do you identify these reportable segments? Okay, now what happens is that on what basis do you identify? On what basis do you identify? So that you would have to stand that what are the factors that you are going to consider while actually having these reportable segments identified. So this is how you do it, right? The factors that the management used to identify the entity's reportable segments. Kindly read through it. The next thing that you have to do is that you have to present the information about the reportable segments, profit or loss, assets and liabilities. Now, it's a very important thing. You see, uh, this diversified company has got info about reportable segments. So what do you have to do? You have to report the sales, you have to report the profit, you have to report the interest income and the interest expense, and you have to report the non-cash expenses. You have to report the total assets. The non-current assets and the liabilities if presented to management. Now see, try to understand this thing. Now see, let's try to understand this thing. What happens is, the fourth thing is you have to provide the information about the reportable segment. What exactly do you mean by providing the information about reportable segment? This would mean what? You had 5 operating segment, 1, 2, 3, 4 and 5. So these are the 5 operating segments that you had, right? So what happens is you present the information separately for each of these operating segment, and then this all other means that, like for example, you had 15 more operating segments, but they were not reportable segments. So what you do is that you add up the results of all of them and you present them under the heading of all other. Remember, this all other is not a reportable segment. It's all other segments. They are all those segments which are not to be reported separately. So see, you have to show the sales, inter-segment and the external, the interest income, interest expense, the depreciation, amortization, the segment's profit, the non-cash items, the assets, the non-current assets and the liabilities. Remember, the liabilities are only required to be shown if you present them to the management. I repeat, the liabilities are only required to be shown if you present them to the management. Now, let's move a bit forward and let's discuss further. There's this another thing which is actually the reconciliations of reportable segment revenues, profit, loss, and assets. Now, what happens is, what you need to do is that whatever the sales that are mentioned in entity, whatever the sales that are mentioned in entities financial statements, you have to show them. How? You have to share, you have to show whatever the sales of all reportable segment. How do you show this? It says sales of all reportable segment, sales of all other operating segments, less inter-segment sales. So you end up getting the sales which are external sales. So I repeat, what happens is the next one of them is you have to give the reconciliation. I repeat, what happens is you have to give the reconciliation. Reconciliation of what? Reconciliation of the sales which are made by the reportable segments, the sales which are made by all other segments, and less the inter-segment sales, so that it reconciles with the sales which is shown in the entity's financial statements. Now let's move a bit forward. Let's discuss further. What actually happens is that you see, one of them was you have to give an information about reportable segment. Second was how you measure the profit, loss, asset, liability. What are the factors that you want to that you use to identify the reportable segments? The information about reportable segments. The fifth one of them is the recons. I repeat, the fifth one of them is the reconciliations. That is what you have to do. The sixth one of them is going to be what? I mean, like there are multiple reconciliations, that is of revenue, profit, loss, etc., etc., etc. Then a very important point, which is the geographical information. Let me repeat, a very important point, which is the geographical information. Now, try to understand what happens is, when we talk about the geographical information, so for this, you need to understand one thing. For example, if your main disclosure is geographical, like for example, north, south, east, west, etc. If your main disclosure, what is the main disclosure? Like, see, here this entity identified its reportable segments using the relevant segment. Like car parts was one of the parts, motor vessels, another category, software is another category. So you're probably establishing it on the basis of product over here. So if this main disclosure is product wise, if this main disclosure is not geographical, then what happens is you have to give a geographical disclosure. And what do you have to give the geographical disclosure? You have to talk about revenues and non-current assets of all main locations. Of all main locations. So you have to give the revenue and the non-current asset of all the main locations. Of all the main locations. Now, lastly, there is this information about the major customer, and what do you mean by this? So what happens is, if there is any segment where sales from one customer is greater than or equal to 10% of operating segment sales, then you need to give the info about customer. And how do you actually give the info about the customer? So this is one of the examples. You don't mention the customer's name. You just mention the amount of revenue and the segment to whom this customer belongs. You just mention the revenue and the segment to whom this customer belongs. Okay, so basically what happens is, under the requirements of IFRS 8, you have to give all these disclosures. And from the exam perspective, what is it that you should know? You should know that these are the disclosures that are majorly required to be given. So what are these disclosures? If you could just remember them on the tips, that is info about the operating segment, the method of measurement of the profit loss asset liabilities, the factors which are used to identify the reportable segments, the detailed information on the sales, etc. of the reportable segment, the reconciliations, the geographical information, and the customer and the details about the major customer. So basically what happens is, IFRS 8 operating segment requires you as an entity to actually um, um, to actually identify the operating segments and then identify the segments which are reportable. Um, and then what happens is that you have to give the disclosures on the reportable segments. Fatma Risana, what it says is that if sales from one of the customer is greater than equals to 10% of operating segment sales, then information about that customer is to be provided in this format, in this specific format. Okay, so this marks the conclusion of IFRS 8 operating segment. I'm going to share all these documents that I've used for IFRS 8 to people in the group so that you can have access to it. So that marks the conclusion of IFRS 8 operating segments.